Yeah, good afternoon, everyone. Very grateful to the Direct Tax Committee of the ICA and its organizer for giving me this wonderful opportunity to host this today insightful session. It's literally give an immense pleasure and pride to introduce myself. I am CA Sanjay Agarwal, committee member of the Vasai branch, and extend a warm wishes, warm welcome, heartful greeting to each and every member of present here in this remarkable and enriching session on the topic bird eye view of the Income Tax Act 2025, which is graciously organized by the Direct Tax Committee of the ICA with gracious presence by one of our most renowned speaker of our times, CA Dr. Girish Ahuja sir. My heart, it's truly filled with the joy to witness such a massive participations. I am genuinely delighted to be host for this session today and hope all of you are ready to decode the Income Tax Act and make it your best friend forever. Once again, I warmly welcome all the requested members to this platform and sincerely appreciate the visionary leadership and tireless efforts of our Direct Tax Committee, organizer of ICA. Thanks, friends. Let's start these sessions with the welcome address by CA Piyush, Chairman of the Direct Tax Committee of ICA. Brief about the CA Piyush Sajed. It's really my immense pleasure to introduce Piyush Sajed. I have a lot to say about the Piyush, but keep it in brief. I would simply describe him as humble, down-to-earth personality. Whenever I met him, I feel his depth, intensity, and visionary thinking. He's someone who always believes in constructive decision and progressive policy formulations. 8% PUC is one of the most active, dynamic personality with ICA, contributing his time, wisdom, leadership across various committees with the great enthusiasm and commitment. His calm demeanors, balanced perspective, and dedication make him a true inspiration for all the professionals in the fraternity. So we will hear the welcome address from CA Piyush, Chairman of the Direct Tax Committee of the ICA. Piyush, your thoughtful on the Income Tax Act 2025 are eagerly awaited. Piyush, over to you.
Thank you very much, CA Sanjay Agarwal ji, who is moderating this session. Thank you very much. Most respected CA Girish Ahuja ji, I would say CA Dr. Guruji, whom we call, and who has been always been obliging Direct Tax Committee wherever the programs are there, whether it's a virtual. In fact, Direct Tax Committee always says that Ahuja Saab hai to DTC committee hai hamari council ki. Thank you very much, Ahuja sir, for joining us. My friend, a very able expert in direct tax himself, Vice Chairman CA Vishnu Agarwal ji, who has been a great support to me during this year of term of the council, wherein a lot of activities have happened under the Direct Tax Committee. And Sanjay Agarwal ji, again, thank you also for joining. And very good evening to all the participants who would have joined, I know, today for hearing none other than CA Girish Ahuja ji. Of course, we have chosen a topic of Income Tax Act 2025, and it's a time when you would be busy with tax audit season and after that corporate tax filing. But it is now important also to understand Income Tax Act 2025. What does it do it? Or what are the can you mute it? Yeah, so it's important. It's the right time. You need to now also know what does Income Tax Act 2025 has in store. What would be the new nuances which will be coming in? And I'm sure nobody else could be better than Ahuja Sab in this. As we all know, Income Tax Act 2025 would be effective from 1st April 2026. And already rules have been framed. We were discussing the other day with the authorities that the rules should come by December most probably. And in fact, there is a committee also been formed to review all the forms under the new act. And we will be sending suggestions soon from the Institute of Chartered Accountants of India, for the purpose of which we have done our outreach through Google Forms also. The members who are listening would have received those emails. If you have not received, please do go to our website. I would seek your suggestions on this, that how the new forms look like. Very specifically, the suggestion at least on the form 3CB, 3CA and 3CD, which is our tax audit report, which will be the, of course, what would be the new number is different when it comes to Income Tax Act 2025. But it is very important that the suggestions of our membership, because audit report is the report through which we express ourselves. And whatever suggestions you do have, please do write to us. Already we have made some draft suggestions which we are discussing amongst the committee members, myself, Vice Chairman and other committee members also. But even if you have, please do send us maybe in a day or tomorrow. Tomorrow is up till Friday, because we endeavor to submit it that by Monday to them. Apart from that, obviously, there is also another committee been formed in regard to changes in ITR forms. For that also, Google form has been read for seeking suggestions from various members. If you have not received emails, please do visit our website, DTC page, and please do give our suggestions. There is always and issues which are encountered when we are dealing with ITRs, filing ITR forms, ITR 1 to ITR 7. So the suggestions can be twofold. One can be incorporated in the returns which will be filed for financial year 25-26, that is assessment year 26-27 under the old law. And also simultaneously, that committee which is formed under the CBDT is also working upon developing of the new forms under the Income Tax Act 2025. So I thought those two important things I would like to bring out before you and seek your suggestions here. Most importantly, when today I'm talking to you, in fact, today we were supposed to be in one meeting. A committee has been formed for improving quality of assessments by the CBDT under the leadership of CCIT, and myself and Vice Chairman were able to attend today. Today that meeting was scheduled, but due to some medical emergency, it has been postponed. And the idea behind that committee is to improve the quality of assessments. I do know that a lot of members, I do listen from them, I do get complaints that quality of assessments is not good when it comes to faceless, because members, SSC, are not able to express their thought process in a faceless situation. So I believe that committee will be looking into that process. We'll be sending our suggestions. On that also, you can write to me or Vice Chairman or on dtc@ici.in. So any of such suggestions, what my request to the members who are listening today, or to your friends who are not listening, you may pass on message. Whatever suggestions you have, you do escalate to DTC committee. We'll take it before the appropriate authority. Idea is that yes, it should be raised before the appropriate authorities, and if those can be considered. And one very important update which I thought I would like to give you. Yesterday, in fact, we had a meeting with the Comptroller Auditor General, Deputy CAG Sandhya ji was also there. And it was a general discussion which was happening in regard to, obviously, as you may know, Deputy CAG team is also involved in conducting audit of revenue department, that is income tax. And there was a basic suggestions, basic discussion was all around what could be the suggestions from the members. And it was a stakeholder consultation. I would not say the suggestions from the institute, but suggestions from individual members. So certain members from North, because the meeting was in Delhi, certain members from Delhi attended, and they gave their suggestions, constructive suggestions that what could be the suggestions for improving the administrative processes in the income tax department. Of course, department has gone a long way, but there would be always certain issues, and there is always a scope for improvement. So those were discussed over them, and I thought I'll just brief you on that. So without taking much of time, I would request all the members to please be attentive. I know there would be a lot of questions coming up on this Income Tax Act 2025 when Auja Sab and Sanjay Bhai will be taking into those questions in the last 15-20 minutes. And apart from that, also, if any other issues or Income Tax Act 2025, you have a suggestions, because this would be again reviewed through a budget 2026 and pre-budget consultation paper we have already sent you. And we have already started receiving suggestions for the amendment in the Income Tax Act 2025. If you have any further, please do send to us, since we will be submitting our report and making a presentation to CBDT. Because this budget, whatever changes come in budget, would be in respect of Income Tax Act 2025, not Income Tax Act 1961. Because Income Tax Act 2025 would be applicable from 1st April 26 FI. And therefore, all those suggestions would be in regard to that. So lastly, I thought I'll just convey you my best wishes to you. Happy Dhanteras, happy Diwali, happy New Year, happy Baubuj. It's a great festival season. I hope you enjoy. My best wishes to each and every members and your family members. Thank you very much. Over to you, Sanjay Bhai. Sanjay Bhai, you will have to unmute.
Yeah. Thanks, Piyush, for share your wonderful and visionary thought process on the subject matter. Now, I'm going to introduce another dignitary in this forum, a very great personality, Mr. Vishnu Agrawal ji. A brief intro about the Vishnu Agrawal ji. It is truly an honor to introduce Vishnu Agrawal ji, a personality who embodies humility, wisdom, and professionalism. Having had the privilege of spending time with him over the course of the professional journey, I can confidently say that he is a practical, calm, composed individual, someone who approaches every situation with clarity, balance, and grace. Vishnuji, known for his excellence, analytical skill, and remarkable ability to present complex professional matters with precision and depth before the various commercial and revenue forums. His dedication to the professions and his insightful perspective make him a true inspiration for all of us. So, following the welcome address, we will hear the welcome note opening remark from the CA Vishnu Agarwalji, Vice Chairman of the Direct Tax Committee of ICA. Yes, Vishnu Bhai, your thought on the Income Tax Act 2025 are eagerly awaited. Vishnuji, over to you.
Thank you, Sanjay Bhai. Respected our own Sri Giri Sahuja ji, the true leader of the direct tax in the country, our honorable chairman of the direct tax committee, CA Piyush ji, today's moderator, and I can say my brother and the managing committee member of the Vasai branch, CA Sanjay Agarwal. I welcome all of you in this webinar of the overview of the Income Tax Act 2025. Friends, across the country, various webinar and the event has organized by our various branches and the various POUs. But always when name comes of the Girish Ahuja ji, everyone eager to learn, eager to hear segregates. Even the tax audit season is going on, but today more than 2,000 chartered accountant has already joined for this webinar for year 2 Girish Ahuja ji. So I will not take much of the time, but I just highlight 2-3 what we are doing at the Direct Tax Committee. Friends, the first time of the Direct Tax Committee, under the Direct Tax Committee, we have printed the Income Tax Act 2025. Myself and our chairman Piyush ji thought that all the publication house is selling the Direct Tax Act in the 2,000 rupees and 2,500 rupees. So why not we should print this Direct Income Tax Act 2025 under the Direct Tax Committee in the 500 rupees only. So I request each one of you to the maximum benefit of the Direct Tax Income Tax Act 2025, which is published by the Institute of the Chartered Accountant of the India. Friends, the tax audit is going on, and under the Direct Tax Committee, we have also published the revised guidance note for the tax audit 44AB. So wherever you face any problem, friends, just to take the help of our guidance note 44AB. At the same time, friends, we have also released the ITR forms for the benefit of my young chartered accountant. So wherever you face any type of the problem for filling the ITR forms, all forms are hosted on the website. So please go through that for the benefit of your business and the interest. Friends, I will not take much of the time because each and everyone is eagerly waiting to hear our Girish Ahuja ji. So I request Sanjay Agarwal ji to brief introduce our Girish Ahuja ji, chartered accountant across the country. Is known very well, but for the benefit of my members, young members, just I request Sanjay Agarwal ji to introduce our Girish Ahuja ji. Thank you, friends.
Thank you, Vishnuji, for share your wonderful visionary thought process on the subject matter. And now, the moment we have been waiting for. Please welcome Income Tax Guru, CA Dr. Girish Ahuja ji, who has been guiding the light in the world of the direct tax. I feel truly fortunate and honored to have the opportunity to introduce you, sir. We all have grown up reading your books and learning from your immense knowledge. And I never imagine that one day I will get the opportunity to share the same platform with you. It's indeed a very special and memorable moment for me. So although Girish Ahuja ji, sirs, no, I don't think so need an introduction. As a part of the traditions, and I would like to take this privilege to briefly introduce such a learned, respected, and inspiring personality. About the academic, Girish sir, I would say the BCom and MCom completed from the Sri Ram College, Delhi University in 1965, completed Chartered Accountancy in 1970, with the rank holder in both the intermediate and finals, completed his PhD from the Faculty of Management, SAM, Delhi University in 2009, joined as a faculty in the Sri Ram College, and after almost serving the 41 years, left it and started as a practice in the field of the direct tax. Sir is nominated for the various government bodies as a member of the task force for the redrafting the Income Tax Act and new income tax law, nominated as an independent director to the Central Board of Director of State Bank of India for the 2 terms, nominated with the approval of the Supreme Court to the Board of Directors of Unitech Limited, appointed independent director on the board of the Ruchi Soya Industries Limited, one of the concern of the Patanjali groups. He is author of almost 25 books on the direct taxations with the for both the student and professional, and delivered more than 3,800 lectures, various topics on the direct tax organized by the ICA, ICS, and various commercial forum of the revenue. So, sir, it's a great opportunity for us. We are here to listen you. One important thing during this, and before over to sir, one important thing I just want to tell you. If there is any questions, I request all the members, please drop the question in the drop box. Our backend teams will compile them, and all your questions will be addressed collectively by our esteemed speaker of the today's sessions. So, sir, without add anything and decode the of new Income Tax Act and make it very crystal clear for all of us. Giving this mic, this platform to you, sir. Thank you, sir.
Good afternoon to everyone. Two very young, of course, energetic persons from Bombay, and both are the Central Council member. One is the chairman of the Directors Committee, CA Piyush, a very bright person. I have heard him many times, and he has shared dias with me many years also. A wonderful person. And of course, the second, of course, is Vishnu Agarwal. He's also expert in income tax. मैं एक चीज बता दूं, ये दोनों बॉम्बे के हैं, and they are really respected all over India. And I've seen, I've shared dias with Vishnu ji also, and they are working really very hard in the Directors Committee, very very hard in the Directors. And this is a challenging job this time, because besides, of course, the old act, now they have to look into each and every line of the new act and give suggestions to the government. And they do listen. Let me tell you, the institute is respected. And particularly, if the chairman and the vice chairmen are very learned, they are really, sometimes they are, everyone is learned. I'm not saying everyone is a chartered accountant, but they have a good experience in the direct tax, and they have been practicing for so long. So what I'm trying to explain is that you are in good hands, and they are looking after the interests of the institute also, vis-a-vis, of course, the government. Thank you very much. And of course, we have Sanjay Agarwal ji, the moderator of this program. And although I knew his name for ages, but I've seen him personally today only, and I will be visiting and going to the Mira Road study circle also, and then we'll be meeting personally. And we have one more, I would always remember, and he is the secretary of the DTC, Priya Subramaniam. Piyush will agree with me that she is also works very hard, and I have seen her over the years in the institute working hard for direct tax. Very good for that. And let me start with the thing that the first thing that normally people ask, what was the need of Income Tax Act 2025? This is what is being asked every time wherever I have delivered the lecture. And then secondly, they ask you, you had also prepared one income tax bill way back in 2018. And we submitted that bill, of course, to the finance minister somewhere in August 2019 or something like that. And why that bill is not there, or why that act is not there. Let me tell you, what really happened is, whatever suggestions we have given, and we had made the new law, today, I would say, how many sections I'll tell you later, but whatever amendments we had suggested then, they've all been incorporated via various finance acts, starting from Finance Act 2019, 2020, Finance Act 2021, 2022, Finance Act 2023, Finance Act 2024, and Finance Act 2025. All those amendments have been incorporated, which we had given them. The faceless was also part of that. But what really happened is, over the years, Income Tax Act came in 1961, more than 5,000, I would say more than 6,000 amendments took place. And so many amendments were there that it has become very cumbersome. Yeah, you know, if you look up the, even go to the Google and say how many sections are there in the Income Tax Act 1961, you will see there are 298. They are not 298, these is absolutely wrong. But even today you will find there is 298. You all know that in the 1961 Act, section 15 to 17 was given for salary. 18 to 21 was there earlier for interest and securities, but it is no more there. 22 to 27 was house property. 28 to 44 was business. 45 to 55 was for capital gain. And 56 to 59 was for income from other sources as far as computation of total income is concerned. Now, what really happened? What really happened is, now you wanted to bring any amendment in business chapter, or maybe in house property chapter, maybe in the capital gain chapter. It is already watertight. You can't go to 27 for business because if 27 is allotted to the house property. You can't go beyond 44 because 45 was allotted to capital gain. So what was to be done? You had to bring certain capital section, like there was section 44. Then we came out with 44A, 44AA, 44AB, 44AC was one time there, 44AD, 44AE. Then we forgot. We brought one more, 144ADA, 44E, 44B, 44BB, 44BBA, 44BB, 44BBC, 44BBD. They were all sections which were brought gradually. 35, 35A, 35AB, 35AC, 35AD, 35E. These are all sections. These are capital sections. 115A, 115AB, 115AC, 115AD, 115AE, 115AF, 115A. These are all sections. 115A, 115B, 115BB, BA, 115BAA, BAB, BAC, BAD, BAE, triple B, BBA, triple B, BBC, BBD, BBE, BBF, BBG, BBH, BBI, BBJ. These are all sections. So there were around 800 sections which were there in the Income Tax Act. But we all used to say there are only 298 sections. But all those capital sections are sections. There are no space available, so they had to introduce those sections. I remember I just take 2 minutes call with you that there was one, those young chartered accountants must be knowing about, one chapter was on tonnage tax income. They wanted to bring that chapter on tonnage tax income. It is also presumptive tax, like presumptive tax on shipping business. So when they brought this act, the first section was 115B. And after B, there is a V, X, Y, Z. How could they bring it? And there were 28 sections there. So what did they do? 115, 115BA, 115BB, 115BC, 115BD, 115BE, 115BF. They went up to 115BZ, but they were not completed. So then what did they do? 115BZA, 115BZB, 115BZC, like that. So what I'm trying to explain, it had become so cumbersome. Although you also remember these sections, I also remember they thought of now coming out with every capital section with capital alphabet has been given now a new number. A new number. So that's why, obviously, number has to go up. But at the same time, there were many sections which were inoperative. Even we also didn't know at times that this has become inoperative. And I used to tell them, before you read any section, kindly see the last line or the first line. You will come to know whether it is applicable or not applicable. But now, those were inoperative. Those sections have been done away with. So for ATH, ATH, ATHH, ATHH8, ATHHB, ATHHC, ATHHD, ATHHE, ATHH, so many sections. So these have been omitted. More than 80 sections, rather I'll say nearly 90 sections had become inoperative, that they have been done away with. Secondly, next point. You know, we always have, you must have seen the ready reckoner, TDS at a glance, TCS as a glance. Now, if you remember, in the 1961 Act, we have for TDS section 192 for salary, 193 for interest on securities, 194, 194A, 194B, 194BB, 194C, 194D, 194DA, 194E. It goes up to 194 LBD. So many sections, both for resident and non-resident. Then 195 resident. Now, what have they done? They have divided into two parts. One, section 392, only meant for salary and contribution of provident fund, accumulated provident fund. The section is 192. Earlier section was 192 and 192A, where you receive the payment from provident fund, period of 5 years is not expired. So 192, 192A is now 392 section. But the rest of the sections, starting from 193, going up to 195, all sections have been put under one section. And that section is 393. Under 393, they have given different table. At a glance, for all resident, TDS, various types of TDS for resident. All are there, 193, 194, 194A, 194B, all are there, but now not there in serial number. Table 1, serial number 1, 2, 3, serial number 1 is 193, serial number 2 is 194, serial number 3 is 194A, like that. Then they have given one for non-resident. All those sections starting from 195, or there are many other sections which are related to non-resident. So they have given that under only one section, 393. Starting from 193, going up to 195, and even thereafter also, 192 BC, 6 BC, 96. And for TCS, they have given one section, 394. 394 section for TCS. So they have brought it in a tabular form, giving a section and serial number, giving the condition, giving. Pardon me? Acha, is it okay now? Okay, thanks, sir. So what I'm trying to explain, those TDS sections have been now brought in a condensed form, no doubt, under section 393, of course, for salary, and that was 392. And similarly, for filing statement for compliances, they have given one section. So it appears to be simple, but it is not, or you will come to know when you read it. It is simple. Now they wanted, the language has become very difficult. It is a British language which was used because we followed their language. So they have now simplified the language. Now you must have noticed, notwithstanding anything contained, must have been used in Income Tax Act 1961 for more than 250 places. Now, instead of that, now they have used the word irrespective of anything contained. Irrespective. So notwithstanding has been replaced with irrespective of anything. Sounds little simple. Sounds little simple. Now there were so many provisos and there were so many explanations under each section. I remember section 10 clause 23C relating to those charitable institutions, education and medical and so on. In 1023C, there are 42 proviso. 24 proviso under section 10 clause 23. 24 provisos. And even under each proviso, there may be explanation. Explanation number 1, explanation number 2, explanation 3, then they have forgotten to A, to B, to C, so that the 10 clause 23 section, which is now no more important, had run into about 20 pages. And you had to look for those provisos, and it was really a very, very difficult job to understand that section. Now, what have they done? All those provisos which were there under a particular section or under a clause, now have been given a subsection. Those provisos are under subsection. Those explanations are also part of the subsections. There is no proviso now in the Income Tax Act 2025. There is no explanation there in the 2025. Certain explanations are given as interpretation. There were explanation, now there are interpretation, somewhere they are given or somewhere there as what you call subsection. Some are under subsection, some are under interpretation given in each chapter. So they have tried to simplify the language. But they were given the direction that you do not have to change anything there. You have to reproduce it in a different format. You have to bring the text, the principle, basic principle or basic thing should be same. You have to retain everything. Although it was in the job that they will remove the old regime, they were given instruction not to touch anything. So old regime is still there. Deduction under chapter 6A, which is now replaced by section chapter 8, whatever is still there. It is there. All sections are there, ATC, the right and from ATC to ATU. But obviously this is for old regime and it should have gone, but probably at this stage, they never wanted to change anything. They were given instruction. There was so much so, if you look up for exemption under section 1032, that is minor income, which is clubbed under 64(1)(a), and then you were given an exemption of minor income, a deduction to the extent of only 1,500 rupees per child. It is still there. It doesn't mean that 1,500 is very big, but what trying to explain that they were given instruction not to change anything. So they have not changed anything. Even the rates of income tax, which are for new regime, they are still there. They want to change, they will do it. And then secondly, they what did they do? Allotted the number to all capital sections, removed the language, which was very difficult, not understanding or anything like that, converted this proviso into subsection or explanation into subsection, all as interpretation. And now there are 536 sections instead of, I don't say 298, although there were more than 800 and then they have removed something and they have condensed something. So there are now 536 sections with 16 schedules at the end. Obviously, schedule have to be at the end. So language simplified. Words, lot of words which were unnecessarily there have been simplified. Certain things have been put in the schedule instead of the main section. And now it sounds to be simple. Sounds to be simple, but becomes difficult for all of us. We had learned all those sections. We were aware, day in, day out, we were using the sections number. Now, since the number has changed, everyone will have to work very hard to remember, to look into the number of the new section and the text of the new section. Maybe broadly saying, but language simplified, put into various subsections and all that. So, but difficulty is everybody knows what is ATC, what is ATD, what is 54, what is 54B, what is 54EC. But now number has changed and now it will become, but nothing to worry. And we are used to hard work. Everyone who is done CA has done hard work. Let me tell you, even the Prime Minister says that GST has been made successful in this country only by chartered accountant. The chartered accountant worked really very hard to understand the concept of the GST and the lot of contribution that is of the Institute of Chartered Accountant of India all over, because they were conducting so many programs online, offline on the GST. You know the amount of the changes which the GST bring every time. Income tax is only once a year or maybe twice a year maximum. GST is maybe every month. Whenever there is a GST council meeting, you will find changes. Then thereafter, they will keep on issuing notifications, and it is more governed by notification. Still, the wonderful job has been done by the chartered accountant. All we are here as a fraternity. They really appreciate that. Otherwise, it would not have become so successful. Coming to the income tax also, we will do that. We are used to do, we are able to, we will be able to handle this also. Only thing for you is, in the meantime, because I'll tell you later something, in the meantime, you can download, or maybe if you have an act of somebody, you have bought an act, there is a chart given, old provisions, old sections, new section. Another is new section, old section, for a comparative check. Every download the chart, or you have your book, do that, download that, copy it, put it on your table, and keep on seeing it whenever you get time. What was that old section? What is the new section? And sometimes the new section, old section. But that will be later. First thing should be old, new. Old was this, new is this. Gradually you will see, when you get the new, then you will see what was the old in the correspondingly that. The new acts which have been brought, particularly I have also brought the act. I have given the complete, in every section, the erstwhile section also. And comparative chart is very important for you. At the moment, please keep a comparative chart on your table. Whenever you get
Sorry,
time,
sir, your
just
camera
run
is
through
little, sir.
Pardon me, huh?
Sir, your camera is little. You can down it, sir. Your face is.
Okay, sometimes what happens, I go back, and that's why
Yeah.
it appears to be that. Let me put it. I understand now. What is the issue? The issue is that I just go back, and then you find that I am not visible. Am I right? I'll see to it that I don't go back.
Okay.
See. Okay.
Thank
Now,
you.
so what I'm trying to explain, kindly download either from the site, maybe the institute site also. You have the Income Tax Act of the institute also, but hard copy, but soft copy you can put it a hard copy on your table and keep on seeing whenever you get time that what was the old, what is the new. Gradually you will know, you will try to learn that. But the text, one thing I am to tell you, since there are not many changes, whatever was the Income Tax Act 1961, after amendment of 2000, Finance Act 2025, they are ditto there. They are bound to be now amendment in the first week of February. Then it will be a final act. Today it is an act reproduced in a different format, bringing all those sections which were already are there, and in those sections which were inoperative have been done away with. But you will find the amendment are going to be there from 1st February. The idea, instructions were, do not change sections, the text. Because you will not come to know whether that section is there or there are changes made somewhere. When the amendment comes, you will read the amendment, then you will realize what kind of changes have taken place. Otherwise, Income Tax Act 2025 more or less contains all that thing which were there in Income Tax Act 1961. That is what I wanted to say. Now coming to the point. See, every act, whether it is Income Tax Act or Companies Act or any other act you talk about, the first section is always short title, extent and date of commencement of that particular act. Section 1 of the 1961 Income Tax Act was also the same thing. It was Section 1, subsection A. This act may be called Income Tax Act 1961. Now again the same section. Section 1 of 2025, this act may be called Income Tax Act 2025. Same thing, 61 replaced by 225. Subsection B was, it is applicable to whole of India. Still, Section 1B of Income Tax Act 2025 says it is applicable to whole of India. Same. Now that it is applicable to whole, income tax was very well always applicable to whole of India. But if you remember, service tax was applicable to whole of India except Jammu and Kashmir. Because at that particular time, Jammu and Kashmir had a special status. After abolition of 370, now all acts are applicable to whole of India, including Jammu and Kashmir. Because Jammu and Kashmir now there is no special status given to it. So applicable to whole of India. And section 1, subsection C, in the case of income tax advance, it is applicable with effect from, or it will commence with effect from 1st April 1962. It was 61 Act applicable from 62. Why? 61 Act had a previous year 61-62 and assessment year 62-63. So that's why 61-62 applicable from assessment year 1st April 62 is 62-63. Now that previous year or assessment year are gone. So what is the new one? This act is applicable with effect from, or it will commence from 1st April 2026. 1st April 2026 means tax year 26-27. There is no assessment year now, tax year 26-27. Income of the tax year 26-27, we will get the rate for that in the 26-27, but assessment will be done in the next tax year. But there is a word called tax year. Now, there is no word previous year or no word assessment year. Meaning thereby sounds simple. Because when we are filing the chala, when we are filling the chala for advanced tax, self-assessment tax, this or that, we always used to commit mistake when somebody used to put assessment year or previous year or this, or whenever we used to talk about which year case is pending. Somebody used to say previous year case is pending. Somebody used to say assessment year is pending. Now there is only one thing, tax year. So this is section 1, subsection A, B, C. This is one. 99% of all the acts which you think of, excepting few, section 2 is definition. Section 2 is always definition. Somewhere it is used without interpretation, otherwise it is definition. Let me, before I start on the definition, let me tell you, before I start on the definition, let me tell you, there are many sections, whether it was 61 Act or 22 Act or now 25 Act, which are normally a section has a subsection. After subsection, there is a clause. After clause, there is a subclause. Sometimes after subclause, there is an item. And after the item, there is sub-item. Now there are no provision. There are no provision now. Earlier, there used to be proviso also, explanation also. But let me tell you, there are many sections in Income Tax Act which do not have subsection, which has section and thereafter it's clause. Normally what happens is there is a section, subsection. Subsection talks about main section. Under the subsection there can be a clause. The clause used to talk about the subsection. Under the clause there is a subclause. Subclause talks about the clause under that subsection. And then after subsection, subclause, there is an item which talks about the subclause. And there is sub-item which talks about the item. So there could be section, subsection. Under subsection, there could be clause, and after clause, subclause, after that item or sub-item, like this. But there are many sections in Income Tax Act 61 and now Income Tax Act 2025 which do not have subsection. After the section, it is clause. It is not subsection. Even the Supreme Court judges I've seen talking about subsection which is not subsection. They say section 2, they say section 2, subsection 31. Absolutely wrong. Section 2, subsection 24, income definition. This is wrong. Section 2, 22, dividend. Subsection E, this is clause. Whenever there is a generic section, common name of the section, generic section, it does not have subsection. Because the generic section is definition. And there is no one definition. There are so many definitions given in the section 2. The section 2 does not have subsection. It has clauses. And each clause is important. And under that clause, there can be subclause. But there is no subsection. Old section 1961, old act. Section 10, income which do not form part of total income. And there are so many income which do not form part of total income. Section 10 never had a subsection. It had clause. Section 10 clause I, clause 1, agriculture income. Section 2, Clause 2, share of profit from HUF. Section 10, Clause 2A, share of profit for firm. Section 10, Clause 4, income of a non-resident external account. Section 10, Clause 10, gratuity. Section 10.10A, computed pension. Section 10.13A, house rent allowance. So there were clauses. They were not subsidy. Even now, there are clauses. Earlier, under Section 2, there were only 48 clauses, which is absolutely wrong. It was not 48, because it was 229, 229A, 229AA, 242A, 229B, 242A, 242B, 242C, like so many capital sections. Now, there is no capital clause. Now, there are two subsections, 112 clauses under Section 2. 112. Earlier, you find Income Tax Act, they're only up to Section 2, Clause 48. But now 112 clauses are there, 112 definitions are there under the Income Tax Act 2025, because there is no capital clause. Next. There were many definitions which were given under various chapters. They have brought those definitions under Section 2. Even senior citizen definition was given at 5 different places. They have brought the definition of senior citizen in Section 2 so that you don't have to. So all definitions other than those are only relevant for a particular chapter. All definitions other than those are only relevant for a particular head of income or a particular chapter, now given under Section 2. So there are Section 2, 112 clauses, 112 clauses. Don't worry. Same. Earlier, Section 2, 1 was agriculture income, 1A. 1A. Now it is Section 2, Clause 5. Earlier, Section 2, Clause 7 was SSC. Now it is Section 2, Clause 11. Earlier, block of asset was Section 2, Clause 11. Now it is 2, Clause 17. Earlier, capital asset was 2, Clause 14. Now it is Section 2, Clause 22. Earlier, charitable purpose, meaning of charitable purpose given under Section 2, Clause 15. Now it is Section 2, Clause 23. Earlier, definition of income was given in Section 2, Clause 24. Now it is given in Section 2, Clause 49. Earlier, the dividend was under Section 2, Clause 22. Now it is Section 2, Clause 40. Earlier, definition of a person was given in Section 2, Clause 31. Now it is Section 2, Clause 77. Earlier, meaning of long-term capital asset was given in Section 2, Clause 29AA, and meaning of long-term capital was given in Section 2, Clause 29B. Now it is Section 2, Clause 62 and 63. Earlier, Section 242A, short-term capital asset. Now it is 102, 2 Clause 102. 2 Clause 42, now it is 103, that is short-term capital gain. Nothing to worry. Language is more or less simple. I will say text is same, but language made simple. And now there are 2 Clause 180. Zero coupon was earlier 2 Clause 48. Now it is 2 Clause 112. Earlier, virtual digital asset was a 2 Clause 47. Now it is 2 Clause 111. So number of the clauses changed because some capital were converted into main section and some definition which were given at the end have been brought to the Section 2. So therefore now 112 clauses, but there is nothing to worry about. Only one change is there. Earlier, meaning of relative used to say in the normal section. I'm not talking about 56-10. Meaning relative includes husband, wife, brother, sister, lineal ascendant, or lineal descendant of the individual. Now the question was lineal ascendant. Somewhere in Hindu law, somewhere it was written, lineal ascendant is only male lineage, father's ascendant, and not the female ascendant, which was absolutely wrong. Earlier also wrong, because Income Tax Act is not only for Hindus, it is for everyone. It's Christian, Jews, Parsis, even for Muslims. So where is the question of saying only male descendant Hindu law? But now they have clarified. What is this? relative includes husband, wife, brother, sister, linear ascendant, whether maternal or external. Paternal. Whether maternal or paternal, more clarity they have given. Don't think that it was not earlier correct. It was earlier also maternal. When I say 50-10, somebody used to say, you cannot take a gift from your nana, mother's father, because not a ascendant. It was absolutely wrong. Because that was not only for Hindus, for everyone. So that was earlier there. Now, for the sake of clarification, make it more understandable, they have used the word maternal and paternal ascendant, and then lineal descendant. So there is nothing much. The same definitions are there. Some brought from other chapters. Some were already there, and these are there. Now, section 3 was earlier previous year. Now, section 3 is now tax year. Earlier definition of previous year. Previous year is a financial year immediately preceding the assessment year. A financial year immediately preceding the assessment year. Then you have to go for what is an assessment year. Then, in case of a new business is commenced, or it is a professional is set up, business has commenced or professional is set up, or a new source of income and come to existence, the previous year will be a period starting from the date of setting up the business and end on 31st March next following. Little cumbersome, little difficult. Now they say tax year. See, tax year. Tax year is 12 months period. They have not used the period of 12 months. Tax year is a 12 months period commencing on first day of the financial year. Tax year is 12 months period commencing on first day of the financial year, meaning by April to March. But so simple. 12 months commencing on first day of the financial year. You don't have to rush to the assessment year. You don't have to bother about that. It is the tax year. Now, that part is also there. Where, now they have condensed it, where a new business or profession is set up. Earlier they used the word business has commenced or profession is set up. Now they have used the word where a new business or profession is set up or a new source of income has come into existence in any tax year. The first tax year will be the period starting from the date of the setting of the business, or they place a date from the new source of income came into existence, and would end by the financial year. Would end by the financial year. Text is say, language simple, so you can understand. So this is tax year now. A 12 months period commencing on 1st April. The first tax year can be less than 12 months if it is a new income. But you all know that if you have other incomes also, the tax year will be April to March. But for salary, it can be January to March if you have started earning salary in January. Or if you constructed a house property in December, it can be December to March. But first only, the future previous year, tax year will always be April to March. So this is section 3 of the Income Tax Act 2025. Section 4 is charge of income tax. More or less same language used, but instead of using assessment year or previous year, they've used the word tax year. Charged by the central government, central act, the levy of a tax and in the tax year. Yep, section 4. Earlier section 5 was scope of total income. Scope of total income was different for resident and ordinary resident. Scope of total income was different for resident but not ordinary resident. And you know that ordinary resident can be only individual HUF, not ordinary resident can only be individual HUF, but otherwise it is resident or non-resident. Scope of total income. It was section 5. Today also it is section 5. Earlier they said scope of total income. In case of resident in India, resident in India shall be incomes received in India or deemed to be received in India, incomes accrue or rise in India or deemed to accrue or rise in India, incomes which accrue or rise outside India. This was there already, 5.1. And then there was a provided provided that in case the individual HF is not ordinary resident, income which accrue or arise outside India shall be included in the total income only when it is from a business which is controlled from India or a profession which is set up in India. This was the language. Now they have made it simple. In case of a resident, income received in India deemed to accrue or arise in India, and in case of not ordinary resident, but in case of not ordinary resident, income which accrue or arise outside India to be included shall be included in the total income only when it is from a business which is controlled from India or a profession set up in India. That's all. Next section, non-resident. A scope of total income, the total income in case of a non-resident shall be income received in India, deemed to be received in India, income accrue or rise in India, deemed to accrue. Not the third income. More or less the same language which is being used, which was used in Income Tax 1961, but the proviso was done away with in the form of a but in case of not ordinary resident. So this is what is called total income. But it is next was residential status, a great change. Very well simplified residential status. Intentionally, I'm taking a little more time to explain to you how it has been simplified. Earlier, Section 6 subsection 1 was residential status of individual. Section 6 subsection 2 was residential status of HUF and firm, AOP, etc. Section 6.3 was residential status of a company. 6.4 was residential status of any other person. 6.5 was if you're a resident of one income, you are deemed to be resident for other also. That was. And 6.6 was not ordinary resident. Now what have they done? Section 6 has now 14 subsections. Why? Because there were many explanations under Section 6. There was Section 161A also deemed resident. Now let me explain to you what is this. Now Section 1, which was earlier for resident individual. No. Now section says residential status of a person. New section 6.1. Residential status of a person shall be determined under this section. That's all. Under this section. Section 6.1 is over. Now 6.2. Residential status of an individual. Earlier used to say individual. Please try to understand the old language. How difficult it was. Individual is said to be resident in India, said to be resident in India if he has been in India for a period or periods amounting to all 182 days in the previous year. He has been in India for a period or periods amounting to all 182 days in the previous year, or in the 4 preceding previous years, immediately preceding the relevant previous year, he was in India for a period or periods amounting to all 365 days or more, and in the relevant previous year, he was in India for a period or periods amounting to all 60 days or more. How difficult it appears to be. Now see the language which is there. Individual said to be resident, no, individual is resident in India. A, if he is in India for a total period of 182 days in the tax year. That's all. Period amounting to all. No, he is in India for a total period of 182 days in the tax year. Simply. Now B, in the tax year, he is in India for a cumulative period of 60 days or more in the tax year, and in the 4 preceding tax year, he was in India for a total period, a cumulative period of 365 days or more in the 4 preceding tax year. Don't you find it is simple? What it is saying? He is in India for a total period of 182 days. That's finished. Or in the tax year, he is in India for a cumulative period of 60 days. Not a period amounting to all 60 days or more. Total cumulative period of 60 days. And in the 4 preceding tax year, he was in India for a cumulative period of 365 days or more. How simple it appears now. Then there was an explanation. And under explanation 1, there was clause A. What was the language? In case of a citizen of India who is a member of a crew of Indian ship and who sails with the ship, or in case of a citizen of India who leaves India for the purpose of employment abroad, the period of 60 days in condition number 2 supra is above shall be substituted by 182 days. How cumbersome. Citizen of India, member of a Indian ship leaves India, or he leaves India for the purpose of employment. Second, yeah, 60 days in condition number 2 supra, that's 365 and 60, shall be substituted by 182 days. My dear, what is the need of changing it to 182 days? Because the first condition, clause A, section 2A, says if you are in India for a total period of 182 days, you are resident. So what was the need of saying 60 days will be substituted by 182 days? There is no need. There is no need. That's why they have used in case of a member of a crew of Indian ship, or in case of a person who leaves India for employment, and citizen of India who leaves India for employment, condition 2B shall not be applicable. 2B, 60 days substituted by 182 days. Why talk about that and then think of 365 days or 4 years? When 182 days is there, he is a resident. So they are so much simplified that only first condition will be applicable, 182 days. Second condition will not be applicable, because when you leave India, you are a member of a crew of Indian ship, you leave India along with the ship, or you have left India, you are a citizen left India for employment abroad. Condition 2 not applicable, B only applicable in first condition, 182. Simplified. This is section 6.2, 6.3. 2 was there, and 6.3 is explanation 1A. Now explanation B was there. Now what was the B explanation there on explanation 1, clause B? It was earlier there. In case of a citizen of India or a person of Indian origin who is outside India, who makes a visit to India, the period of 60 days in condition number 2 supra shall be read as 182 days. And then provided further that if the total income of that individual exceeds 15 lakh, then in the period of 60 days, in condition number 2 supra shall be substituted by 120 days. Supra, and then you have to remember that condition. They say, what is the need if your income is less than 15 lakh? Then it is not applicable, second condition, because it is. They said, what they have said, in case of a citizen of India or a person of Indian origin, this is 6.4. In case of a citizen of India or a person of Indian origin who is outside India, makes a visit to India, who is outside India and makes a visit to India. 1 minute, sir. Sir, somebody, what I'm trying to explain, now what did it say? In case of a citizen of India or person of Indian origin outside India, makes a visit to India, condition 2B above shall not be applicable. That is, if you are here for 181 days, you are non-resident. Condition 2B not applicable. Not that 60 days not substituted by 182 days. What is the need of saying 60 days substituted by 182 days when 182 days is there in the A? So, yes, section 6, subsections 3, 4, 5. They have now mentioned, in case of this person who's covered under 6.4, his total income of the tax year is more than 15 lakh. 15 lakh for both. Then condition 2B above, 60 days in the condition of 2B above shall be substituted by 120 days. That is only the difficult word used here. Otherwise, very simple. Very, very simple. Now, section 6.6. If you are a resident of one CA. You will be resident of all other taxes. A resident for one income will be resident for all other income. This is 6.6. Now, earlier there was a section 6.1a, deemed resident. Deemed resident. You are not liable to pay tax in a foreign country due to your residence or domicile, or your total income does not exceed 15 lakh. Exceeds 15 lakh. You are a citizen of India. You are not liable to pay tax outside India. Then you are a deemed resident. Now that 6.1a is now 6.7. What does it say? Irrespective of section 6.122, if you satisfy the following condition, you will be a deemed resident. But you are a citizen of India. 2, you are not liable to pay tax in foreign country due to your domicile, your residence, or place of duty, etc. And your total income in India, total income excluding income from foreign source, does not exceed 15 lakh. You are deemed resident. And not liable to pay tax outside India, foreign source, that is given in section 640, meaning of income from foreign source, excluding income from foreign source. Now, then next section, 6.1a had a proviso. 6.1a had a proviso. Now it is section 6a. Irrespective of what is given in 6.1, 6.6, irrespective of what is given in 6.7, if you satisfy any condition of 6.2 to 6.6, then this section will not be applicable. Which one? Deemed resident. Then you are a normal resident. Then deemed resident will not be applicable if you have satisfied the condition of 6.2, 6.3, 6.4, 6.5, 6.6. Then you are. This is what is given in 6.8. 6.9, residential status of HU and a firm. It says HU and a firm or AOP will be resident in India, is resident in India if it is wholly controlled from India. That's all. Resident in India, it is wholly controlled from India. The matter is over. You will cannot, if it is not wholly controlled, then it will be non-resident. But I'm talking about resident, if it is wholly controlled from India. Then section 6.10, company is resident, company is said to be resident in India if it is an Indian company or if the place of active management. Now it is company is resident in India if it is an Indian company, or the place of effective management is in India. And the place of active management has been defined in the next subsection. Make it simplified. 11. Now, next section. For any other person wholly controlled from India. That is what is there in it. So they have made it simple. What was 6.6? Not ordinary resident. Now it is 6.13, not ordinary resident. So context same, language simplified, more easy to understand, and more friendly. You will find it very friendly. If you read it, you will find it very friendly reading. Simplified, very friendly reading. This is section 6, residential status. Section 7 was earlier, income deemed to be received, and 8 was dividend. Deemed to be received and 8 was dividend. Now section 7 is income deemed to be received and dividend income. And dividend income merged. Section 7 and 8 of that earlier section is now merged to section section 7. Now section 8 was dividend, that's not there. Now what is section 8? Remember, 3 years back, or 3 or 4 years back, in the case of specified person like firm and AOP, if there is a dissolution or there is a reconstitution and you receive any stock in trade or any capital asset, it was treated as deemed transfer under section 9B. And then in the case of reconstitution, there was another section also, 45.4. That there will be tax also when a partner receive or an AO member receive any money more than any amount more than what is capital outstanding. Now that 9B, which was earlier in our 1961 Act, is now section 8. Same language, where a specified person received from a specified entity any closing stock or any inventory, you can say, or any capital asset, it will be treated as deemed at the time in connection with the dissolution or reconstitution of the specified entity. It will be treated as deemed transfer. Language simplified, but it is same as section 9, which says if a closing stock is given or inventory is given to you, it will be taxable under 28, which was earlier 28, now it is 26. And if it is given to you capital asset, it will be taxable under 45(1), which is earlier 45(1), is now 67(1). 67(1). So what I'm trying to explain, section number change of the 9B is now 8, and 9B sections 28 is now 26, 45(1) is now 67. But the rest of the text is exactly the same. Now this is 9B. There is 9 section deemed to accrue or rise, business connection, all that. It is still there 9. There are so many explanations under 9B. Explanation 1, 2, 3, 4, 5, 6, 7. Now they are all subsections. And there is one 9A also. You know, foreign funds having establishment in India. That was 9A, investment fund. Now that is 9 subsection 3. So 9 section now includes section original 9 as well as 9A. 8 section 8B is now 8. 7 and 8 is now 7. Let's just say. Now after the 9, it should be 10. Everybody. And you know what is 10 of Income Tax Act 1961, income exempt. No, it is not 10. There is one section which we have left, and that section in Income Tax Act was 5 capital A. 5 capital A, apportionment of income between husband and wife. In the case of where Portugal Civil Code is applicable, cumulative of person. You know, in Goa, Daman and Diu, Portugal Civil Code is applicable. What is section 5A? That if if husband and wife are earning salary respectively, separately, that will be kept separate. Husband salary separate, wife salary separate. All other incomes which may be earned by husband or wife will be clubbed, will be combined, and then it will be apportioned between husband and wife 50-50. While computing the total income of a husband or wife, if they are earning salary, kept separate. If they are earning any other income where Portuguese Civil Code is applicable, all those income will be aggregated and then they will be apportioned between husband and wife in the ratio of 50-50 equally. So that 5A is now section 10. That 5A is now section 10. Language simplified, but the same 5A has become 10. Now you say, what happened to 10? The 10 has become 11 now. 10 has become 11. But earlier 10 was very difficult. 10, 1, 10, 2, 10, 3, 10, 4, 10, 10, 10, 10, 8, 10, 10, B, 10, 10, C, 10, 10, D, 10, 22, 22A, 22B, 22C. There are so many sections under section. It went up to 1050, but it was not 1050. It was so many sections. Exemption section. 23A, 23B, 23AB, 23C, 23B. So many sections. Now what have they done? Section 11, subsection 1. Please try to understand the language. In computing the total income of a person, I said person. In computing the total income of a person, income enumerated in Schedule 2, Schedule 3, Schedule 4, Schedule 5, and Schedule 6 of Income Tax Act 25, they are given at the end. Schedule 6 shall not be included, shall not form part of the total income. Income enumerated in those schedules shall not form part of the total income, subject to the condition being satisfied. Condition mentioned in that schedule, satisfied. Subject to the condition mentioned in the schedule, satisfied. What is saying? The total income of a person shall not form income enumerated in 2, 3, 4, 5, 6 schedule shall not form part of total income subject to the condition specified in those schedules are satisfied. Then section 11(1)(b), A, B, B. 11, what does it say? Where the incomes enumerated in these schedules, if the condition enumerated in those schedules are not satisfied, then such income shall form part of the total. Such income shall form part of the total. If those conditions which are mentioned in schedule 2 to 6 are not satisfied, it will form part of the total. Then subsection 2, clause A, in computing the total income of a specified person, income enumerated in schedule 7 shall not form part of the total income subject to the conditions being satisfied. In the conditions mentioned in that schedule is satisfied. If the condition mentioned in that schedules are not satisfied, it will form part of total income. That's all. 11(1) AB, 11(2) AB, the section is over, which was running into 50 pages in Income Tax Act 1961. Now, go to the schedule, and in schedule 2, income which do not form part of total income if the condition is satisfied in case of every person. 2 is in case of eligible person. Tables are there, separate table given. Table 1 in computed income of every person. Table 2 in computed income of eligible person. What is eligible person? Partner of a firm, HUA firm, or you have the non-resident thing. Then there is a chapter schedule for 4 for non-resident. Total income of non-resident. Exemption in case of non-resident. Then it is a 5 for certain financial institutions. Then international financial service sector. So they have classified into various schedule, and for every person it is schedule 2, for eligible person schedule 3, for then schedule 4 for non-resident, schedule 5 for certain institutions, schedule 6 for international financial center, and schedule 7 is certain specified authorities. So those are given at the end. Now the front is very light. The back has become very heavy in the form of schedule 2, schedule 3, schedule 4, schedule 5, schedule 6, and also schedule 7. You have to read those schedules wherever relevant. You have to go there, and then you will see if those conditions are satisfied mentioned in those schedules, it will not form part of total income. If conditions are not satisfied, it will form part of total income. This is given under section 11 now. Now, earlier section 11, 12, 13 were charitable trust. Now, they are not there now. Now, 1023C earlier and section 11, 12, 13. It was 11, 12, 12A, 12AA, 12AB, 12, 30, and then 115 BBC, 164, 115 BBI, all were provisions relating to charitable trust have now been grouped under separate chapter starting from section 332 to section 355. So they are not under 11, 12, 13. They are not under what you call 1023C. They have been taken to, or I said 332, 150. Anonymous donation, that is also there. Registration, that is also there. In 332, registration is there. What you call taxation of the charitable trust, so they're there. Which form you have to, everything. If the specified conditions are not satisfied, 115 BBI will be, they are there. They are there. 115 TD, exit tax, that 150 TD, 150, they're all there. TDA, TD, all there. But now they have been grouped in one chapter, 332 to 355, with slight change of computing the total income, because they are classified as a regular income, residual income, other income. I'll tell you that. But what I'm trying to explain, they have tried to simplify those sections and put there in one group so that you may not have to run from pillar to post to find out where it is there, which section is 115 BBI, what is 115 TD, 115 BBC, and 164. Now they are all put there. So now you have 11 section, I've told you exempt income. Now section 12. Earlier, 13A was income of a political party, and Section 13B was income of a what do you call trust? What is that called? Electoral bonds. Now they have combined these two sections and said income of a political party or income of the will be fully exempt if it is satisfy the conditions laid down in Schedule 8 of the Income Tax Act. That will be exempt. So 13A, 13B, they have been now put under Section 12, and they have been merged under Section 12. 13A, 13B have been merged under Section 12. Very simple. You have to go to Schedule 8 to find out the condition mentioned there. Money should not be more than 2,000 received in cash. You should maintain accounts. You should get them audited. You should be covered under representation of penal law or electoral bond. There is also it is exempt. Yeah, this is what is in Section, what you call 12. Now, earlier, Section 14 was heads of income. Now, Section 13 is heads of income. 5 heads of income, same, but now 13, not 14, 13. Because 11, 12, 13 shifted. And 11 given to income exempt, 12 given to political party and electoral law. They're given. There, bonding electoral trust. Now, 14 section, earlier 14 capital A, income which is exempt. If the income is exempt, the deduction related to that income will not be allowed. But now it is section 14, 14. Instead of 14 capital A, it is 14. And where it was 14, it is now 30. Now, after that, if you remember, 15, 16, 17 was for salary. 15, 16, 17 was for salary. Now, for salary, there are not 15, 16, 17. It is 15, 16, 17, 18, and 19. 19, because 18 to 21 were free, because 18 and 21 was at one time for interest and securities. Now, 15 to 19 is salary. How to compute salary? 15 is say charge of salary. Salary is taxable on due or receipt basis, whichever is earlier. Annual salary will be taxable in the year which they are paid. Like maybe little this way or that. And if the salary is paid to the partner, it will not be taxable under the under this section. It will be taxable under section 26, that is business interpretation. Same section 15. Now earlier 16 was deductions, standard deduction, entertainment allowance, professional tax. No, now 16 is not deduction. Now section 16 is meaning of salary, which was earlier in 17.1. Earlier in Income Tax Act 61, 17.1 was meaning of salary. Now 16 is meaning of salary. Earlier 17.2 was meaning of perquisite. Now section 17 is meaning of perquisite. Earlier 17.3 was meaning of property value of salary. Now section 18 is meaning of property value of salary. Section 18. Now 19, deduction from salary. Earlier there were 3 deductions. Standard deduction, which is still there. Still there. Entertainment allowance, gone. No, government employee entertainment, gone. It is not there. Professional tax or employment tax, it is there. Now try to understand. Earlier, section 1010, gratuity was exempt up to a certain limit, balance taxable. Section 1010A, commuted pension. Section 1010C, voluntary retirement. 1010B, retirement benefit. Or all retirement benefit, retrenchment benefit, 1010. All retirement benefit which the employee will receive, kindly note, it will be added to his gross salary in full. Earlier, we used to add only amount received, less exempt under section 1010 or 1010B or whatever is it, balance taxable. No, now whatever amount of gratuity, whatever amount of leave encashment, whatever amount of commuted pension, whatever amount of retirement benefit, whatever amount of voluntary retirement, all those things which you are receiving at the time of retirement will be added to your gross salary. And then you will be allowed deduction under section 19, which is given in a tabular form. after standard deduction, and after what you call professional tax, then in a tabular form, starting from 3, gratuity. Gratuity for government employees, central government, state government, gratuity for semi-government employees, gratuity for any other employee. Similarly, you have commuted pension for this, leave encashment for this person. Or they are given in a tabular form, in a table, in the serial number, but those sections which were for retirement benefit under 1010A, 1010A, 1010AA, 1010B, 1010C, 1010, all have been brought under deduction under section 90. So whatever benefit, retirement benefit you receive, I will talk about provident fund, other. But it's not a benefit, it is already your money. Whatever benefit you receive in the form of gratuity, in the form of leave encashment, in the form of commuted pension, in the form of voluntary retirement, in the form of retirement, whatever it is, will be added to your gross salary. And then you will be allowed deduction under section 90. Now, section 20 to 25 is now house property. Earlier it was section 20 to 27, 22 to 27. Now it is 20 to 25. One section, 125A, B, but that is merged down is 20, income from house property. Same like 20. 23, annual value. Now it is section 21, annual value, how to determine. Now earlier 24 was deduction. Now deduction under 22. 22 is deduction. Now 23 is unrealized rent and recovery of recovery of unrealized rent or recovery of unrealized rent. Now next is co-owners. It was 26. Now it is 24. Now earlier 27 was deemed illegal. Now it is 25. After this, there is a business chapter. If you remember, business chapter was starting from 28 and was going up to 44DB. So many sections, 44A, 44A, AA, AB, so many sections were. Now there is no capital section. Now whichever was 28 is now 26. 28 is now 26. Next section was 29. Income, how to compute the income. Income under net profit or gain was computed after claiming deduction under 30 to 37. The profit or gain of the business in question will be computed after taking into consideration section 28 to section 60, other than 58. Now it is not 30 to 37. Now it is 30 or 28 to how many? 28 to 60, other than section 58. So all those now, scientific research, separate allotted, telecommunication, separate allotted section, depreciation, separate allotted, those are sections which are separately allotted. Earlier they were 35A, 35AD. 35AD is a separate section now. So what I'm trying to explain, 35E was a separate section. Now they have been given separate section. So that's why it is now you have to determine after claiming, after considering section 28 to 60, other than 58. Ye 58 kya hai? I'll tell you. 58 is, that is presumptive tax in case of resident. 44AD, 44ADA, 44AE. That is now section 58. One section. I'll tell you. Now 26 I've told you, 27 I've told you. Section 28. Earlier section 30 and 31. Separate section was for repair, renewal of building, insurance premium, house property, and separate was rent, repair, insurance of plant, machinery, furniture, etc. Now these two have been merged, and that is now section 28. Rent, repairs, insurance premium, rates and taxes of building, machinery, furniture, plant. Now merged. 20, 30 and 31 is now section 28. 28. Now, please try to understand. There was a section 36, which was running to 36.1, I, 2I, 2IA, 2A, 3, I3, IV, V, VI, VIA. All. Now, section 36 of section 1 has been divided into 4 sections. One is section 29, contribution for employee welfare, which was under section 36, contribute like provident fund, ESI, group superannuation fund, Now what is it? 29 section. 30 section is payment for insurance premium, very kind of insurance premium, which was earlier section 36, used to be 2A, now it is section 30. 31 is bad and doubtful debt and provision for bad good debt, which was under 36(1)(7), 7A. Now it is, what is there? 31. And 32 section is other deduction of 36 section. So now 36 divided into 4 sections. 36 section in 4 section. 1, contribution for employee welfare, which is now 29. 30, premium, insurance, various kind of insurance premium paid by the assessee. 30. 31, bad debt and provision for bad and doubtful debt. And 32, other deduction of section 36. They are same, their language made simple, but they are same, classified under 4 sections instead of 1 section of 36. Now this is section 34. Clear over? 33. 33 other deduction. Now 34 section, please note, is the earlier 37. Earlier 37 is now section 34. 37 is the regulatory section, which was there earlier 37, is now section 34. Can you beat it? Section 34 is 37. And section 40 is now section 35. 40, that clause A, clause B for partners, and that clause A, 30% of the TDS not deducted shall be disallowed, or tax paid will not be allowed. Now it is section 35. And the 40 capital A is section now 36. Now 36 is 40A. 40A2. You know, when you are giving the expenditure incurred and payment made to a related person, 40A3, 10,000 money, paid in, more than 10,000 paid in cash. So that is 40A3. Now it is section 37, comes under section 36. 48 for 3A, now it comes under section 36. So what I am trying to explain, section 40 capital A is now section 36, the entire section. And section 40, clause A, B, that clause B is now, that was partner salary, 6 lakh more, 100%. Then more. That is now section 35, clause E. It's not B, now clause E. You have to see that. Language simplified, divided into, and very surprisingly, 43B is now section 37. 43B is now section 37. Same language, simplified. 37 today, earlier 43 capital B, now 37. And 41 deemed income chargeable to tax is now 38. You will be surprised what kind of this is. And 44 AD, 44 ADA, 44 AE is now section 58. They have made one table. First item, all business other than business referred to in serial number 3. That is transport business. 2, specified, serial number 2, transport business. 3, specified profession. Now 44 AD is now serial number 1. 44 ADA is serial number 3. And 44 AE is serial number 2. Only one table, section 58. Under that table, all the 3 sections merged, and then there are conditions given below. Priya was talking to me. Priya is the secretary. Priya Subramaniam is the secretary of the DTC committee. And she was talking to me, sir, 44 AD section, earlier, you were allowed deduction under chapter 6A, ATC to all that. You are allowed losses of other losses to be set up under 44 AD. You were allowed that. But now, you will not be allowed any deduction of ATC, etc. You will not be allowed any loss to be set up from this income. No loss to be allowed. No deduction, no allowance, no loss to be allowed to be set up. Earlier it was allowed. Earlier only chapter 6A deduction was not available because eligible assessee. Now they say you will not be allowed even losses to be set up. You are not allowed even deduction under ATC to ATGGC. ATI is otherwise not allowed. and you are not allowed any allowance when you are going for section 58. So all these three sections made one section. Similarly, 44B, 44BA, 44 double B, 44BB, BA, 44 triple B, 44 BBC, 44 BBD, BB. They were all for what? BD. Non-resident. They have been given in one table. Only one table, giving serial number 1, 2, 3, 4, 44B, like that shipping company, 44BB. No, they have given in one table. Now you don't have to read 44 the BBA, 44 triple B, 44 BBC, 44 BBD. It goes up to 44. They are given there, one table. And that is section 61. Now, accounts maintenance, which was 44 AA, is section 62. Audit 44 AB, tax audit, is now section 63. Can you beat it? All number of sections have changed. Now 63 is 44 AB, 62 is 44 AA, 61 I've told you. So many sections have been done away with, but now scientific research, all those there, they are given number, preliminary expenses, which were 35D, now a different section has been allotted. So now up to section 66, you from 26 to 66 are business sector. I was laughing the other day. I said, sir, I went to the department and said, look here. Now there are 26 to 66 for house business, 20 to 25 for house property, 20 to 25 for house property. 1 minute, why this is doing? 1 minute, let me put it in a silent mode. So what I'm trying to explain, now if you want a change in business sector, you can't go to 67 because it is capital gain. You can't go to 25, it is house property. They will definitely bring some capital section. When the February comes and you want any change in 26 to 66, a new section to be introduced, there is no section watertight. You will have to bring capital. So whatever capital sections were there in the past, they have been now given new section. But very soon you will find capital section will come into being when new section is introduced. They have no space left for that. So now obviously they will do it. Obviously they will have to do it. So my point is very clear that please note that the changes are only in the number of section, language simplified, like notwithstanding anything contained under section 30 to 37 or 30 to 43C. Now the word is there. Difference. Next section is section 67 to 91, relating to capital gain. The section 45 is now 67. Section 46 is now section 68. Section 46A is now 69. Section 47 is now 70. Section 47A is now 71. Like that. 82 sections. 54 is now 82. 54B is now 83. 54D is now 84. 54EC is now 85. 54F is now 86. They're all there. They're all there. I'm not saying it is not there. It is there, but number has changed. Number, all sections are there, even for mode of computation of capital gain. It is there. All sections are there. But now 91, which was 142A valuation officer, is now 91. Which was cost of acquisition, cost of improvement, and all that is now section 90. The numbers have changed, let me tell you. Otherwise, all the section of 45, 46, 46A, 47, 47A, 48, 49, 50, 58, 50B, 50C, 50D, all are there. Allotted separate section. All are there. All are there. I'm saying allotted separate section. And you can start with that. If you remember the old section, start with 45, you'll reach up to that, 90. They're all sections there. Some minor changes, but all are there. Coming to now, after this 91, other sources was earlier 56, 57, 58, 59. Now it is 92, 93, 94, 95. Say. Now earlier 60 to 64, 65 was clubbing of income. Now it is 96 to 100, clubbing of income. Clubbing of income. 101 is how to compute total income. Now section 68, cash credit. Now the name is unexplained credit, is section 102. 102. Unexplained investment, it is now 103. Unexplained asset, it is now 104. Unexplained expenditure, it is now 105. Unexplained, hundi. If you have taken up borrowing money on account of hundi or other negotiable instrument, now it is included. It is 106. 107 is charge of income of this tax. This 68, 69, what is this? 102, 103, 104, 105, 106. At what rate will it be taxable? Given which was under 115 BBE is now given under section 195. 115 BBE is section 195 now. I'll come to that. 108 to 121 is set up and carry forward losses. 122 to 154, kindly note, is deduction from gross total. 122 is section 80. 180C is section 123. Like same section continuing. TTA, TTB merged into one. Up to 80U it is there. TTA, that 10,000 for interest on deposit. And then for senior citizen, 50,000. That is now merged section. So what I'm trying to explain, all deductions are given under 123 to 155. It is there. Disability, 80U is there, 155, 154. Right, 5, sir. No, now 154, sir. 155 is old section 86. 87A, that relief, a rebate, 87A is now 156. 156. It is now 156. But that 89 section is now 157. Then it comes for transfer pricing sections and all that. Coming to now. 195, I told you 115 BBE. 196, old section 111A. 196. Old section 112 is now 197. Old section 112A is now 198. Old section 115BA is now 199. Old section 115BAA is now 200. 115 BAB, that manufacturing company, is now 201. 115 BAC, that is our individual HUF AOP, where there is a new regime, is now under section 202. 203 for cooperative society. 204 manufacturing cooperative society. 115 AD, BAD, 115 BAE. They are there. All sections are there, sir. Numbers have changed, but the sections are still there. I've taken you to that, all that new regime. All sections are there. 15 BAC is now section 202. Coming to now. Return of income, which was 139, is now 263. 263, otherwise very difficult, because 260 old was really very dangerous. Now 260 is the return of income. 262 is now 139 AA, PAN number. 264 is now tax return preparer, 139B is 264. 265, verification of return, which was earlier under 140 is 265. 260C, 140A, self-assessment, 267 is now 140B, updated return. Can you beat it? 279 is self-assessment. 280, 270 is assessment. 271 is best judgment assessment. 269 is 142. 142 is 269. 142, number changed, but everything is there. But that 148 section is now 280 section. 148 capital A, 281 section. 149, 282 section. 150, all sections are there. They are numbers different. Numbers are now changed. Have you noticed this point? Then we have 332 to 355, I told you, for charitable trust. We have so many other sections, but I'm noticing the time. It is already 45, and I've been told that we have to keep this program up to 6 o'clock, and there must be some questions. If there are questions, Sanjay ji, you can all ask these questions because time is short.
Yes, sir. Sir, very grateful. Thanks to you, sir, for delivering such an enlightful and insightful sessions. It was indeed a privilege to learn from you, deep knowledge and practical experience, sir. Thanks, sir. Time for question and answer. So, sir, there are some questions for you, sir. The one member is asked why section number are rearranged, sir.
For me,
The question is, sir, why section number are rearranged?
I have told you now that we had the capital sections and they were becoming very difficult. Now what they have done, they have allotted each section a number, each capital section with capital as number. So already it will be changed. And then there were certain inoperative sections and those sections had to be abolished. They were already there. They had to be removed. So obviously you will have to change the numbers of the sections. And that's why they have changed the numbers of the section. But basic text remains the same, language simplified.
Okay. The second question, sir, ask from which year this act is applicable? Since section 2 says it's applicable.
Next year, 26, 27.
Yeah. So this 1st April
Next year,
2026.
please, next year, it will be assessment year for previous year 25-26. That in 1961 Act will be applicable. 26-27 assessment year, previous year 25-26 Income Tax Act will be applicable. Next
So
next
sir,
year,
out of
26-27 is the tax year.
okay. So some sections are applicable later on or
1st April
retrospectively.
26 will be now under the new Act. Income which you earn from 1st April 2026 will be under the new Act, and that will be taken as April to March tax year. There is no assessment year now, tax year. And one more important, very important, section 536 is very, very important. Please try to understand this. The name of section 536 is repeal and saving. It is written there, the Income Tax Act 1961 is hereby repealed. But then next section, it is written, subsection 2, please, what is written? Any notice which has been issued up to 31st March 26, any penalty which has been, proceedings which are pending, anything which relate to the past up to 31st March 26, the old Income Tax Act will be applicable. You will have to read even search which has taken place before 1st April 2026, old Act. Notices which have been known, so reassessment, old. All this old Act will be applicable. So new will be only for income which is earned on or after 1st April 26. Whatever actions, whatever is pending, whatever notice pending, whatever appeal pending, whatever the things are pending, old Income Tax Act 1961 will be applicable. This is called savings. Savings. Tell me now, question, next question.
Yeah. Sir, one member is asked question on the CGS scheme 1988. So,
58.
The scheme on the CGS scheme 1988, and he told that why this either this section should be the rearranged or either this act should be the abolished.
They have tried to simplify it. For resident, they have put in one place. For non-resident, they have put into one place. They are not international financial center. They are under the table. Different tables are given, but at a glance you can see conditions given there and below that. What I'm trying to explain, it was very difficult to say 139 LA, LB, LBA, LBB, LBBC, LBD, you know, 193, 194, 194A, 194B, 194BB, 194C, 194D, 194DA, then you had 194E, 194F, 194G, H, I, IA, IB. You remember those sections? 194 IA, IB, 195, 196, 196A. So many sections were there. Right up to now, they have simplified it, put in a tabular form. You can see at a glance for resident separate, for non-resident separate, international financial center separate. They have given in a different way, but it sounds difficult in the beginning, but gradually you will pick up but you will have to remember now serial number instead of the table, instead of the section.
Okay.
And let me tell you, the rules have not yet come. Only act is done. The rules will come somewhere in the month of December, January. And thereafter also, I tell you, rules also have clause, capital section 17A, 17B. They will be changed. Number of the rules will be changed. Even the number of forms will be changed. Now 3CD may not be 3CD anymore. 3CA, 3CB. You have to wait and remember. Now you remember, everybody remember 3CA, 3CB, 15CA, 15CB. Number may change. We will have to wait and watch. Rules will come, form will come, and then amendment will come in the month of February, the new budget. And that time, the final thing will, final shape will take place for tax year 26-27. Now, amendment will be for tax year, not for assessment year.
Yes, sir. Next questions. Sir, someone asked that old and new regime still will be there in the new act.
For me, old and new,
Old and new regime still will be there in the act.
99%. I will not say anything, but I am of the opinion, and if I'm, it may be old regime has to go, maybe this year or maybe next year. They are waiting only for one thing, Sanjay ji. There is no old regime for firms, partnership firm, LLP. There is no old regime, new regime. Otherwise, there is a new regime for company, there is a new regime for individual, new regime for HUL, there is a new for UP, PUI, there is a new regime for cooperative society. But only one kind of person, firm which includes LLP, the tax is again 30%, and they get all deductions. So now they are looking for some concession if they can give this year for firm, and then they will try to do away with old regime. In the case of pump, the tax is 30%, and then surcharge is only after 1 crore. Now they have to think over. They have to think over. I suggested them, why can't you have 25%, 10% surcharge mandatory? So instead of the 22% of company, you make it 25% for business. For why? You say, why 25? Surcharge, because in the case of the company, there is double taxation. First, tax to be paid by the company, and then dividend tax has to be paid by the shareholder. In the case of a partnership firm or LLP, tax is to be paid by the firm. Partners do not pay any tax. That's why they will have to keep the tax at a little higher rate, which at present is 30%, and surcharge only when you cross 1 crore. Suggestion given, why can't it keep it 25 plus 10%, 27.5%, 4 is the otherwise, so that it will appear some concession and they will switch over to the new regime. 99%, if they accept that, the new regime will come this year only. And if they don't accept that, they will take a little more time, but old regime has to go. At this time, why didn't they remove it? Because they were told not to change anything, not to touch anything. All that deduction will go ATC to ATU, which is now 123 to 154. All will go when it is a new regime. These days, people are going for ATG. I tell them, why you are going for ATG? What for it is ATG required? Sanjay ji, tell me. All are under new regime, more or less. And in the new regime, ATG is not allowed. So why we are after the ATG, and then it is under the scrutiny of the department, ATG. Now, what is the ATG need? If I am under new regime, you are under new regime, ATG is not allowed. Complete ATG is not allowed. ATGGB, ATGGC not allowed. So my point is, more or less, they are of a view that we should only have new regime. It will make it more simplified, and minimum 75 sections will go once you switch over to new regime. Then that all those sections 122 to 154 will go. Many other sections will also. So what I'm trying to explain, we will see things will happen, maybe this budget or maybe by next budget.
Yes, sir. I think this is someone asked some related question to this previously you answered. The old regime is when the completely is discarded. All the exercise of the simplification will be futile. Will again need to be rearranged the sections.
Yes, sir. Obviously, number of sections will go. They will say this will not be applicable for of this year. And maybe if this goes this year only, the act will change. They may change. But section numbers have to go. They may say these sections have become inoperative. Maybe not this year, next year. They will have to become inoperative. Chapter 6A, though not today, chapter 8. They will have to become inoperative. They will do it. It is they will do away with these sections. Like or weighted reduction was there, they are all going now. They are all going now.
Okay. So one is the last question, sir. So related to this financial year, so financial year 26-27 tax year and financial year will be the same.
No. Tax financial year is April to March. Financial year is a government year. Financial year is always April to March, and April to March is the tax year.
One
financial year is April to March, but income of this tax year, that is will be taxable under next financial year. Next financial year means next April to March. Now we will not use the word assessment here. Next financial year. Assessment in next financial year. But very simple. 12 months period commencing on first day. This is tax. Like GST.
Yes. One member is asked for the form ATG is allowed.
For me?
For the form ATG is allowed.
Because ATG under old regime and forms are under old regime. For a form ATG is allowed. For form ATG is allowed. But for new companies who are under new regime, for individuals who are under new regime, ATG is not allowed. That chapter 6A is not allowed. No?
Okay.
For a firm, it is still allowed. Because firm doesn't have any old regime or new regime difference. It is only old regime.
Yeah, this is again one member is asked, sir. One person is a joint holder with 3%, 3% and fixed deposit about 10 lakh. Then taxable, how when the FD first holder are different?
No, you have the first name to the bank, the first name is important. Unless you tell them that these are the different names, you have to deduct the TDS for the different person. Otherwise, they deduct the TDS in the name of the first person. I may be having joint account with my wife, but the first name is important. They will deduct the TDS of the first person, not the second person. Unless you tell them that this one money belongs to them, this normally, then why don't you have a separate account? Why do you want an account as a joint account? Joint account may be for the purpose of withdrawing the money. But please put your money, the first person should put his money in one account. Wife, myself, my wife, one account. My wife and my name, second account. They should have a separate account. Please never have the joint account and put every money of the husband and wife in one account only. This is not done. In income tax, it is a hodgepodge, not allowed. You have to keep separately.
Okay, sir.
Sir, it is 6 o'clock already now, almost.
Yeah. So we are just ending this session and just final remark note. Sir, thank you, Sir Girish sir, for sharing your deep thought on this subject matter. And it was really, truly wonderful and insightful session, a great learning experience for all of us. The flow of questions and the active participation of members today clearly showed how eagerly our fraternity is to listen and learn from your vast experience, sir. Your profound knowledge of income tax and your ability to simplify complex concepts will surely guide us for the year to come, both in our professional journey and understanding the rich history and practice of taxation, sir. We are indeed proud to be in era where such an eminent personality like you continue to inspire and enlighten us with your wisdom, sir. सर एक शायरी आपके ऊपर मैंने रखी है, दो वर्ड आपको सर आप सेशन पे। इल्म की रोशनी जगमगा उठी, इल्म की रोशनी से जगमगा उठी महफिल आज, इल्म की रोशनी से जगमगा उठी महफिल आज, हर लफ्ज में छुपा था तजुर्बे का ताज। जब आप जैसे मिले गुरु तो कहना क्या, सोचने का, देखने का, सोचने का नजरिया जब बन जाए कुछ खास अंदाज, सर। थैंक यू सर. Thank you all the participants and members for your gracious presence. And
let me tell you one thing. I did not take a specific section for one reason, because the law is going to change something or the other in the month of budget, February, when the budget comes. It will be better to talk about the particular sections here after that amendments have taken place. So we have given you a word overview, but in the word overview, I told you what kind of simplification has been done and what was the intention of doing it it was becoming so cumbersome. All proviso, all explanations have been done away with. But let's see what is going to happen in the budget, ensuing budget, which will come in the 1st February. Let's see that. And there are so many recommendations given by the secretary sitting in front of me, Priya Subramanian, under the Directors Committee for pre-budget. And we do give also post-budget. And this time they are not giving only pre-budget, they are also pointing out the mistake in the Income Tax Act 2025 or the clarification which they want in the Income Tax Act 2025. Am I right, Priya ji?
Yes.
Yes, sir. Yes, sir.
Thank you.
Thank you, sir. All the
Thank you so
participants-
much, sir, for joining and enlightening all of us about the new Income Tax Act. And slowly, by the time it comes to February, we will get a good grasp of all the provisions so that we are well prepared when the act comes into force on 1st of April. And thank you for participating in our webinars, seminars.
The only difficulty with our chartered accountant, they cross the bridge when it comes. Please start doing it. Please start your preparation. Sir, read at least few sections every day. You will find it's not taking much time because you know the old law. Just have a look at it. Just have a look at it. And you will have little more confidence that nothing new is there, but put a chart in front of you, old comparative chart, old and new section, a new and old section. This is what I want you to do it before actually you read that. Thank you.
Thank you, sir.
Thank you very much, sir.
Thank you, our organizer,
All the best.
Direct Tax Committee.
Yes,
And heartfelt thanks to Narmata ji and Priya ma'am for this platform, for their valuable time and efforts behind the scene. Thank you. Thanks,
My
everyone.
apology for not acknowledging Namrata. My apology for not acknowledging. Thank you.
Thank you.
Thank you.
And wish you very happy Diwali to all the
And
participants.
all, I also wish everyone a very happy Diwali, sir. Very, very happy. Thank
Happy
you, sir.
Diwali to you, sir.
Thank you.
See you soon, sir.
Thank
On 16.
Thank you.
Thank you, sir.